Good afternoon, friends. Today we are going to discuss very important topic regarding mutual fund investments. You know, there are almost 15 lakh crores lying in equity mutual funds, uh, almost 7 lakh crore in mutual funds with including balance schemes, another 5 lakh crores with ULIPs, and 3 lakh crores in NPS. And the purpose of making this video is to show how glaring is the potential returns loss in mutual fund. If you do some calculations, which we will be discussing in this presentation, you will find that actually mutual fund investment is just like a black hole. It hardly gives you any return and you continue to remain invested in loss making shares. Let's go further. If there are 50 members in family and out of 50 members only 5 are performing or earning, then 45 members will be drag on family's total income. That is precisely the case with mutual fund portfolio. Only few mutual funds are going in the right direction. Balanced mutual funds are either sideways, balanced scripts in mutual funds are either sideways or they are going down. Now, why it is so? Why it is not possible to have a mutual fund in which 100% all members are performing? Basically, this is because of diversification. A lot of sectors are cyclical, a lot of sectors are dependent, and your portfolio doesn't reflect that, because it is up or it is down all based on only you have to grow rich only slowly, and there is no other better option possible than investing in mutual funds. Friends, this is a slide of best performing mutual funds. You can see year till date returns and 1 year return, 2 year returns. They are hardly comparable. If inflation is rounding 6 to 7%, unofficial inflation is almost 10% in COVID times, as you know, then there is no wealth creation in any mutual fund in 1 year time, 2 years time, 3 years time, and 5 years time. So why you are remaining invested even though there is no sizable income generation in mutual funds? Because Pareto principle is there, 80-20 rule, what we call it. 20% of the stocks will perform, 80% will not perform. And we are here to discuss this particular problem. Friends, do you know that huge wealth can be created just by discarding losers and holding winners long enough till they are performing? You will appreciate that if we have only those mutual funds stocks which are performing in our portfolio, then our return will be far bigger than this. So we are going to provide you this education, how you can get out of this rut. And please remember this, until unless you will think out of the box, you will keep on getting the same returns which people have been getting in mutual funds, say 7%, 8%, 10%. So you have to exit those laggards who are dragging your portfolio down. And this is very important because each and every stock that doesn't perform is a drag on your portfolio. And let winners run. This is easier said than done. But if you allow your winners to run and non-performers to get exited from the portfolio, you can generate more than 10 times returns what is being generated right now. Now we will discuss few laggards which are there in each and every mutual fund portfolio. And the important thing is that these all scripts are from Nifty and they are very big giant cap scripts, starting with ITC. Now, what I'm showing here is in terms of X is basically the return generated by any mutual fund scheme or you can say it is the cost of one option. Either it is a call option or it is a put option. Now, if ITC falls below a certain level, say 250 level, and if you are having one option of put option with that, now this is chart of ITC, which is weekly chart. And why I'm showing in box fashion? Because if I will show you in candlestick patterns, then it will become too data becomes too difficult to compress in small this thing, and it is not visible also. So what we have done, we have to show that dramatical presentation, how the stocks are moving. ITC from last 6 months has not delivered. It has fallen from 260 to 160 level. Now, even a single put option might have given you 20 times return, say in this particular period. Now, at the same time, there is possibility of generating very good return between this period and this period. That is 5 times. And again from that level to this level, 5 times. So basically, if you are holding one put option of say 10,000 rupees, it would have been generated into 2 lakh rupees. And same way, another 1 lakh rupees would have been generated till time had you been, holding this put option of ITC. Would have been giving you, almost 100 times return. That has been the fall from Bharti from 540 to 400. Although Nifty is hovering around the same level of 12,000 today, after touching to 7,500, but Bharti has given you very bad returns. From 540, it has fallen to 400 levels. So this 5 times, 5 times, 5 times are the various phases in which your put option would have been used. Now another laggard, third number, is Bajaj Finance. You can see how beautiful it has risen from 2,400 to 4,800, 2,000 to 4,800 before COVID. And once COVID was there was a serious fall. So you would have made money in call, while falling when the market was coming down. So Bajaj Finance is still around 3,300 level, which is 30% less than what it was when the Nifty was around 12,000. So there was a huge money which could have been made while going up, and at the same time while going down. Now again, a good amount of money had been made in call option. Now this stock again may give up soon, and we may again find that put option will give us very good return. The purpose of showing this X is basically the kind of wealth that could have been created just by riding the wave is phenomenal. So if you are a mutual fund investor, you might have units which have been purchased at say 5,000 level and 4,800 level, and you are still stuck up with Bajaj Finance with no gains. But in options, you see you are making killing as far as this ride of call option and the ride of this put option is concerned. Another laggard, State Bank of India. Again, this is a weekly chart. You can see, blue line is showing you how call option has been making money, and red how put option has been making money. Now you see it has fallen from 340 to 195 levels. So there is a huge income which could have been created, while in mutual fund units you might have stuck up with 360 odd levels, and you don't know when your rates are going to come. But in options, you can see that the money is getting multiplied in so many times. Laggard number 5 is IndusInd Bank, 1,600 pre-COVID level, right now trading at 600 levels. Straight away fall from 1,600 to 400, your put option would have grown 100 times. 10,000 put would have become, trust me, 10 lakh rupees. Now this is the size of your entire portfolio. One put option is giving you a cost of your entire portfolio. Now there are so many other put which are also there. So that is the power of option. If you are in mutual funds, you will remain stuck up at 1,600 levels. and you don't know when that level is going to come. Nobody knows. But in put option, you have exited once it has broken certain level, and you have remained, you know, hold on put option that would have given you phenomenal return. Another laggard, Larsen and Toubro, 25 return times returns from peak level. From 1300 it has came down to 900 levels, and we don't know when recovery will be there. So what is the point in holding these stocks in mutual fund units when you don't know when is going to be the recovery? But in put option, you are making very smart money. Laggard number 7, Hindustan Unilever. Again, you can see the weekly chart. It is still around 2018 level, 2 years before, the same rates. Currently, it is trading at 2,150. Its high rate is 2,400, again below the January, February levels. And you can see how good this stock has been for making killing in options. 5 times in call, again 5 times in put, 10 times, again 10 times, again 10 times, and 8 times. And this is the power of options. If you know when to enter and when to exit, such is the, return that, no stocks can even come closer to it. Now, for people who are stuck up in Hindustan Unilever in mutual funds from last 2 years, there has been no growth. But in options, you can see how beautifully they would have exploited all the rise and fall of the stock. Next laggard is BPCL. Same story continues. 10 times from 525, it is coming now, trading now 340 levels. Huge wealth destruction in BPCL. Nobody knows who will buy BPCL, but in put option, you are making solid income in this. Another laggard, nobody knows when that level is going to come, but you see that put option has gone more than 50 times. If you would have taken one put option and kept on holding it till today, there may be some losses if you remove 20%, say buy and sell of various months, re-entry, and what you call that, rollover. And even if you discard even 20%, 30%, still huge money can be made by buying and sitting with put options. Another laggard, Z Entertainment, from 550 levels, right now trading around 175 levels. Single put option would have given you 50 times. What it means is 10,000 put would have given you 5 lakh rupees. Now another laggard, Maruti, pre-COVID level 9,500, still trading around 6,900. Rate hasn't come yet, but in put option, huge money has been created. Unbelievable. This stock is very good for short sellers. And, at the same time, it also gives very decent income when you are buying call when its time has come. And again, these all are weekly charts, friends. There is no need for timing. Once it is down below a certain level, you have to buy a put option. Once it is above a certain level, you have to buy a call option. It is as simple as that. This all entry and exit we teach in our options trading course. And once you master this course, this kind of income you can generate easily. We'll discuss it further. Another laggard, UPL, 360 to 640 pre-COVID times. Again, after some dithering around these levels, then fall from 570 to 300, 100 times put option has grown. So all these are multi-baggers, or what we call it, reverse compounder. Multi-baggers in falling. So if you are buying one put option, it is becoming 100 times. And again, call from 300 to 500 levels, you could have made 50 times. Another laggard, ONGC, high of 275 to now current price is just 67. Huge wealth has been destroyed in ONGC, and a lot of mutual funds are still holding this stock. So what we are trying to say is basically All these are nifty stocks and giant cap stocks, but they are not delivering results. Now Hindalco, 230 to 100 levels, 50 times your put option is growing. Now from that level, 20 times return has been generated. So these are multi-baggers in every sense. But thing is that you should not buy and hold in forms of units in mutual fund, but you should have, you know, this flexibility of buying call and put as and when the time arises. Now this is 15th laggard. This is Mahanagar Gas. It was very good stock in 2017 when it rose from 2000 from 500 levels to 1200 levels. And friends, from last 3 years, it is, you know, making up and down between 1200 levels and 800 levels. And you see how much wealth that can be created by just shorting at 1200 levels and buying again at 800 levels. Just like Hindustan Lever, it keeps shuttling between 1200 and 800. Now again, since it is touching 820 level, it is a good time to buy it considering the previous support. So list is endless. High quality stocks that are just drag on portfolio. I can name so many stocks that are not there anywhere near their all-time high. Axis Bank, ICICI Bank, NTPC, NMDC, Sun Pharma, Motherson Sumi. Huge wealth has been destroyed in Motherson Sumi. PEL, almost 50%. Gale, Tata Steel, Power Grid, Shriram Transport Finance, LIC Housing Finance, Eicher Motors, M&M Finance, 400 levels to now 125 levels. L&T Finance, 200 level to 60 levels. IOC, almost becoming 40% of its all-time high. Max Financial doesn't know where to go from last so many years. Concord, Federal Bank, all these stocks have fallen 50%, but still they are finding place in all mutual fund portfolio. So friends, does your money deserve such mediocre performance? These are giant black holes. Why you are putting money in these black holes, I don't understand. Think about few performers. Number one is Reliance Industries. Non-stop rally from 1100 to 2200. And at the same time, very good return in call and put option before that. Again, your 10,000 to 50,000 rupees becoming 10 lakh rupees. These are the kind of stocks. Infosys, 100 times call option from 600 to 1100. Before that also, Tata Consultancy, 10 times in call option, input option, then 100 times in call option. That is the power, 1600 to 2800. Wipro, 10 times in call option, then 20 times in put option, then 75 times in call option. These are real multi-baggers. Dr. Reddy Lab, from last 1.5 years, all call option have, in 3 phases, delivered 10 times return. These are the real returns you should strive for. Davis Lab, 150 times, non-stop rally from 400 to 3200. And just you have to kept on holding that call option. No need to do any other thing. Escorts, 30 times from 600 to 1200 non-stop. So great money can be made whether it is up or down if you are able to identify trend. So we teach how these trends can be, located, and all stocks are multi-bagger in sense in case if you are able to find it. For example, Tata Motor has been such a great multi-bagger, Mahindra and Mahindra, because if you are able to buy a put at 400 level at Mahindra and Mahindra Finance, which is now 100 rupees, you have grown your wealth many times. So now a lot of people will talk that SIP and all that, but if you're doing SIP and even if you're doing dead stocks, that SIP has no meaning. You should do SIP in those stocks like Dr. Reddy's, Davis Lab, and should stick to it. Reliance Industries. But people say that it is very easy to say that when the stock is going to go up, but it is very difficult to implement. No, friends, I can tell you one thing from my experience and my knowledge, which we are going to share. Now, the Reliance Industries, which has been 100 times multi-bagger in call option, now time has come to sell Reliance Industries and buy its put option. I may be wrong, but this is my indication. Although my confirmation will come only at the end of this month, if Reliance starts trading below 2100, right now it is 2178. Once 2100 level goes, that is 10% fall from its peak, then we will think of entering into put option into Reliance Industries. So all you have to do is to just buy one put option and hold till whole month. And once you get some good returns in that, then buy a next month put option and again keep on holding. So what was the purpose of this whole presentation? Presentation was this, that if you are buying mutual fund units, you are going to get, host of losers in your portfolio. Your return can escalate to 100 times of what returns you are generating right now. So if you are having 10 lakhs portfolio, it can become 100 lakhs by removing, at the end of say certain period, possibly 1 year, 2 year, 3 year, I don't know, but that can become 10x. But if you buy call and put, what we will discuss now, then your returns can become 100 times. But again, this is very risky thing, considering that call and put options has got very limited life. Trades right, you will be able to manage it. Now there are a few myths which are being peddled by financial intermediaries, and if you are able to do switching at the right times. We have shown you all slides, and we have shown you that how you can make money many times if you are able to buy a call or put option and then able to hold so many of them. Now, a lot of people say that it is impossible to time the market. So there is no question of timing the market. No one needs to, because if your stock is falling beyond a certain level, you have to exit that stock. It is as simple as that. There is no point of timing. And why we should do that? Because once if it breaks certain level, then we don't know at what level it will go and hold. It may keep on falling. For example, Yes Bank started falling from 400 odd levels. At 275, a lot of value investors came in. At 100 levels, there were fury for buying. But what happened? Eventually, it became zero. Same with DHFL. So you never know what is the bottom of any stock. So the best policy is to exit it once it breaks certain level from the top, and re-enter once it again crosses that particular level. So with that theory, you can get exit from lot of non-performing or bad stocks. SIP is 800. No, it is not. SIP is not 800 of the world. Only if you are putting into right stocks and that right stocks are compounding regularly, then only it is 800. If my stock is non-performing, even if I'm buying SIP every month, even if I'm at cheaper price, it has got no value, because eventually the stock, if it is not performing, final value of SIP will also be at the lesser value. So overall, okay, my cost may come down, but I will not be making any money in SIP, in loss making stock. Now, mutual fund is best for retail investors. There is no further, truth can never be further away from this. We have just seen so many stocks, all large caps, they are destroying wealth. And those stocks, if you are buying in any mutual fund scheme, doesn't make any kind of sense. And it will take many years to come at purchase price. So this is a complete farce that mutual fund is the best. No. There is no point in investing if they are not performing. Only, mutual fund scheme has been marketed very professionally. Otherwise, there is no such great returns in mutual fund as such. Best app, best fund managers, best distributor, all these are good marketing gimmicks. Best research supports, best mannerism, best friendly relations, best advertisements. I mean, they are just not the right thing. Mutual fund sahi hai is basically only for those who sell that particular product, like manufacturer, that is AMC, and distributor. Otherwise, for investor, it is not sahi. Maybe sahi for very few investors, but majority of investors are not making good money if you consider inflation and taxation. So what we think that you should not have this approach for your wealth creation. You should think of another option, that is options marketing or options trading. Options are good as far as wealth creation is concerned. We have seen that they are much cheaper, and you know the risk level is very less. And if you use them judiciously, you can make hell of lot of money in options. Only problem with option is that option should not be treated as a lottery ticket, and it becomes a speculation. You should do options trading only as per as system, and that system is what we teach in our trading system. Mutual fund investment is crude and needs to be defined to such an extent where it starts generating sizes on a regular basis. Mutual fund is not bad, but it is crude way of investing. It can be refined. Refined in the sense you have to select, you have to make your own mutual fund by selecting performing scripts and buying put options of weak stocks. That way, you will not only have a hedge, but also you will be able to generate very good income if the stock goes, you know, out of orbit. So most important factor is consistent return from any of your scheme. So what we think is that reverse compounding is also very good. There is nothing wrong in shorting a stock which is not performing and enjoying the fruits of its compounding, because every time it will fall, you will be making good money out of that. While mutual fund investor will keep on holding that in anticipation that it will come back someday. Now, it is not so simple as we have shown you in all these slides. There is a whole lot of research which gets involved into this. There are so many things which has to be taken into consideration while buying call and put option. No, and that particular art he used to teach to every normal person who wants to improve his performance in mutual fund, and he wants to generate consistent wealth. So how do we that? We teach it by, you know, online classes on weekends, where we take you to various strategies that should be employed. Normally we have 30 to 40 kind of options. It is a bag mix of options which have, you know, certain indicators which are, triggered, either buy or sell. And then what we used to do, we used to buy them in uh, at least 5 times or 10 times. Your purpose has been solved. So we of income, which will help you, you know, in understanding how this entire theory works. So all option buying is done in client's account. We only provide necessary education and guidance at very nominal fee. So basically, this whole idea is about making your portfolio 10 times to 100 times. We are not aiming for any mediocre kind of returns which are given by mutual funds. This is very aggressive kind of investment. But at the same time, since it is a diversified, you have got whole lot of, you know, performer stock and a whole lot of non-performer stocks. And once the changes, we also change. We aim that almost for 30 to 40% of the trend we will not be able to get. We will be able to get only meat of the trend, that is 60-70%. Still, we will be able to make good money if we use this kind of strategy. So these all online classes, you can contact us, where we will share with you our whole idea of options, and you will not, you know, return to mutual fund investments if you see the beauty of options just for a couple of months. You will see that the returns are unmatchable by any kind of scheme. And now few disclaimers that we are not SEBI registered. This video is for education purpose. There is no guarantee of profit. It is all dependent on markets. Option studies are risky. But what we aim is that even if 25% is performing and 75% not performing, you will be able to maintain your capital. And if you think that we are talking sense and that can be uh, tested and tried, then please give us a call and also like this our video on this channel and subscribe to it. If you have got any question, please do make it in comments box. This idea all was not to defame any particular scheme or anybody, any individual, but what we were trying to say is basically what is the reality which is happening in all portfolio of mutual fund investors. Thank you, gentlemen. I appreciate your watching of this video. Thanks once again.